Hi everyone, my name's Michael and welcome to another episode where we dive into the Bitcoin price analysis, working out where we're going to from here, whether it's going to be up, down, or a little bit of choppy sideways. So, looking here on the daily, um, we've got the down regressive channel, which has been occurring since way back in March, which we've been watching this for the last few months. We are in the lower half of the range where this is the middle line where we have rejected a bounce against it. I'll just draw because as we go down into the lower levels, this does disappear. So that is the middle line of the channel. We've found a little bit of resistance and we are now moving down into the lower levels. While we're here, let's have a look at the 50% area from the rejection of the Japanese carry trade liquidation event that occurred last Monday, the 5th of August. Now, if we go from the high of our recent impulse up to the low, and we'll just measure that out there, we can see that we're still in the top half of this rally, which is great. That is a very positive sign. As we come down, we expect to touch the 50% level. We expect that we can touch the 618 Fibonacci level and as deep as the 786. Anything lower, then everything starts to get a little bit shaky and we start to really have to calibrate the support levels. So now we've got this, we know that these are levels that we're watching on a macro. Let's move down into the hourly and see where we are sitting. So through here, we've got all our liquidity wicks as far as hourly candles go, from the highs and lows of each level. And as price comes through, like this one here, it mitigates and resets with new support and resistance levels. So if we're to zoom out just a little bit, just to have a look, this is the 50% level that we can potentially be coming to, and these liquidity wick lines are where we can find support. So there is nothing that really sits in confluence with the 50% level. We've got a little bit high, we've got a little bit below, and we have an imbalance candle just here. So within here is an imbalance candle. So we've got the wick of candle 1, the candle preceding it, does not touch and cross over the low of the wick of the third candle or the candle following it. So that means that there's such an open gap in this candle that it leaves a lot of area for it to fall through. And these candles, these red lines, are retest wicks that have been tested through. And as you can see, they've actually come through multiple imbalance wicks. So there's not a lot of area of, it gives a lower level of confluence if it hasn't found relative support. So if we're to move down to the 618 level, we can see that there are far more. We've got 1, 2, 3 levels of liquidity that have not been retested, which potentially gives us more of an inclination that we can come down to here. So there is a potential that we can be moving our way down to this area here. Now, of course, there can always be more area that comes through and maybe something a little bit less, but we have to see how things play out from here on. So, with that being said, this isn't an area for buying. This is an area of waiting for price to come down. Because we are in this daily because we're in this daily channel down, we're not in the upper half range. We're not in the purple side, which is the sell side liquidity. We are in the blue side, which is the buy side. So on our daily, we're on our buy side. On our hourly, we can see that if we draw up the liquidity wicks from here, we've got up to here to current price. We can see that price is, sorry, let me just adjust that to that one. So from there we can see that price is in the buy side, but it's also challenging the lower half of that level. So with that being said, we have to wait and see if we break through here, but we also want to see that where this high comes in, we have got this, we've got a low, a lower high, a lower low, a lower high. Are we going to come in and form a lower low down here? So if we're to draw another aggressive channel just across this way for our current direction from the 9th of August, we're showing that we're in the buy side of both. So what we would rather see is it come up into this area, which is the sell side liquidity of our short term, take a short, and then move down into these lower prices. On the short term, we are on both the buy side and the buy side of this liquidity, but it's not an area with, but in this area, there with too much potential support further down, it's not really a good area to go long. We want to see that come down, mitigate a little bit, and show us a little bit more support, and or let's start to see support in this channel as we start to come up. But also having said that, so while if we choose to go long here to target these areas, we need to make sure that we're still in the buy side liquidity of this area. So coming down a little bit further gives us more room to play in this buy side liquidity. However, we are still in the buy side liquidity of the greater daily channel. We're in the buy side liquidity of a week-long channel, and in a 5-day channel we are in the buy side but sell down. So with 2 days of, so on our macro and our short-term hourly, we are facing down. But what we want to see is we actually want to be moving up and get a little bit more support first. This week here, yesterday's week of Wednesday, we wicked above and we closed right down to the low, which means that we've essentially mitigated everything in that candle on a daily. And we're going to come down, and with this candle here, we do have this hourly imbalance down here, which sits at that 50% level, that 0.5 of a retracement of that move. So having said that, I am looking for a buy area further down to go long, but if price shoots up from here, I will be looking for shorts up in this area. So let's just go down into the hourly, and I will draw out some point of interest areas on where I'm looking to go long. So I'm looking for a buy area through here still. That's a nice juicy area. We will be, if we do get down to here, we will be breaking this channel, but we will be also looking in a really good spot of the macro channel. If we come down and we test above the 50% level, I will be looking for a potential buy through here. Let's change that to a point of interest long. And if we can get up into this area, this area just here. Although we are in this macro long, I'll be looking at this as a point of interest short, because that gives us confluence on both the daily, that gives us the confluence of the daily, and coming up into this hourly short-term rally down, which means that we could still potentially perform both. We come tackle here, we could come tackle this one, and we could actually fulfill every move from there. So that is my point of interest long. My point of interest short is between 60,600 and 60,100. My areas of point of interest long is 56,630 down to 56,070, with my low target of 54,100, 54,800 between those layers. All right, that's it for today. Thanks for tuning in, and we'll see you tomorrow. Ciao.